All right. Well, welcome. We've decided. Thank you for the wave. Stretch up there. Yeah.
That feels
Get
good.
into it. We are three clowns that hang out every Friday and do a thing called Presidio Bitcoin Jam, which is like a live stream podcast where we just kind of talk about what's happened the week. What's the new news in Bitcoin? And so that's kind of nominally what we're here for. But I think we're going to give a little bit of just intro on ourselves so you have a little bit of context in case you've never heard of our show. So
It's been compared to The View.
it has, not favorably either.
A YouTube comment.
So I'm DK.
I thought you were Whoopi.
I was told I'm whoopee. I think that's like not a good thing. I don't know. At least it wasn't said favorably about me.
Read as you will.
Hold on, Alex, is this being recorded?
Recorded, not live streamed.
Okay.
All right.
So safe.
We can be a little spicier than usual.
Don't make me do a lot of edits, please.
So do you want to kick it off with context, or do you want to intro yourself?
I'll start.
Okay, go for it.
I'm Steve. Helped create Presidio Bitcoin. I run Spiral, so part of Block, and I'm one of the three clowns on the show we do every Friday.
I'm Max. I wrote a fund called Hive Mind Ventures, investing in scaling Bitcoin and increasingly a lot more on the energy front as well. So Bitcoin is energy money. That's my view.
Actually, given the topic tonight, I'm also like a 20-year angel investor veteran, so done a lot of angel investing, including a lot of Bitcoin startups. So I have a few thoughts on the topic.
And actually, do you want to tell a little bit about? I think we all have a bit of a checkered history. Maybe Max and I more than Steve. But do you want to talk a little bit?
Speak for yourself, DK. Where's this going?
Well, just a little bit about like the kinds of investing you've done, and
I thought you were going to say because he's from Memphis.
Yeah, well, always.
well, okay, I'll introduce myself. I'll share my checkered history, and maybe they will choose to volunteer theirs. So I've been in Silicon Valley for 25 years. I was fortunate to join Google kind of early on, which is where I met Steve, and founded a gaming company after that. And I've been active as an angel investor for maybe like 15-ish years or so. And it's kind of like general tech, right? It was not specifically Bitcoin focused initially, more just general tech, tech topics. And I think along the way, I'd heard about Bitcoin kind of early and didn't really figure out much of what to do with it. And then when Ethereum came on the scene, I was like, oh, cool. Everybody's saying you can build stuff. And like, cool. Like, I'm in it for building things and what can be built with these technologies. So that kind of tuned me into it a bit. And I sort of made a few investments in kind of startup-y things in the kind of crypto ecosystem.
Shitcoins.
Yeah, and they weren't really, they were more like technologies in that general ecosystem versus, there's probably a couple of shitcoins in there.
If we're revealing the whole checkered past.
It's not shitcoin.
But it wasn't like, at least to me, it did not seem scammy the way that when I look at a lot of things, they're like, wow, that's definitely a scam. A lot of things there's like, okay, smart people, cryptographers from Berkeley who are doing a new thing. Let's meet them and see what it's all about. So I think I've spent a lot of time both in traditional Silicon Valley tech investing as well as Bitcoin and, sadly some crypto investing. But I've kind of come through that journey and kind of got out of that a long, long time ago now. It's been 7 or 8 years, I think. So I'm a little bit of like a reformed angel investor. But I don't want to speak for Max, but I think Max, you may have something to share.
Well, I mean, yeah, I actually don't know what you're thinking of checkered history past, but so my story and kind of what I focused on is I was part of the founding team of a company called Bright, which is like Sunrun for Mexico, so a solar company back in late 2014, early 2015. And, read about Bitcoin 2011, thought it was cool, did not buy any, wish I had, hence why I have outside LPs now. But increasingly, when I was in the energy world, I started seeing Bitcoin more and more as energy-backed money. Shout out to Satoshi Energy guys who are not here tonight, but that really helped that solidify for me. And then that was what convinced me to kind of go all the way. And so, I also did definitely touch, and play with some shitcoins in 2017. Interestingly, I was more excited about Ethereum originally because I was like, okay, we can do peer-to-peer energy trading. That's a great idea. It was only after going very deep over many, many years, I think one thing that I would share that's important, that's come out of our podcast up here before, is every single person that's gone really, really deep into Bitcoin and come out Bitcoin only, it's because generally they didn't have a job for one reason or another for many years. So, I was basically semi-retired in Mexico for 2 years because it was very inexpensive. That's when I had the opportunity to actually build Bitcoin from scratch in Python, really see the difficulty adjustment, understand the beauty of it, and get this idea that it was going to scale sort of OSI model, like TCP/IP, HTTP on top, stuff like that. Anyways, so I invested in another fund. We did all the crypto stuff, Uniswap, all the things, you name it. It was super hot. Quickly realized no one was running full nodes. Literally, I could not find a single person running a full node in Ethereum, and that's when I felt like Michael Burry in The Big Short and decided I wanted to bet it all on Bitcoin, and specifically building on top of Bitcoin. And so, I started High Mind Ventures 2021 across the two funds, around $30 million, usually write first checks, $250K to $1 million, sometimes a little bit less. And I've invested in about 50 companies at this point. And I've got a lot of ideas and lessons from scaling with lightning payments, energy stuff, lending, all kinds of things. But I've seen a bunch.
Since David wants to hear checkered past, I don't know. 2013 is when I learned of Bitcoin. I was at Google at the time, read the white paper. Frankly, was busy with Google life. I was never a hater of Bitcoin, but I sort of understood the white paper from a CS perspective, but then I just moved on. Fast forward to 2017, didn't have a job. I'd left Google in 2015, was trying to think of some startup to do, and like DK said, Ethereum grabbed my eye, like supercomputer, world computer, any kind of application building. The Silicon Valley person in me that like resonated with me. But then I didn't have a job, so I spent 2017 just studying all this stuff. I bought like dozens of shit coins. It happened to coincide with a bull cycle. But I came through that much more appreciating how Bitcoin can be sustainable and long-lasting and very positive for the world, and now almost everything else I didn't really believe in at all. So then I went through, okay, I don't want to just invest in Bitcoin, I want to work on it. So what do? I actually considered starting a VC fund like Max did 4 years later, but I deemed it too early. Turns out that was correct. It might still be correct.
It might still be too early for Sweetwood, so jury's out.
But so then I just started contributing to open source Bitcoin. I'd never contributed to open source before. I started helping out the Bitcoin Core project, and I did that for like a year and a half just as a volunteer. And then I got the job at Block leading Spiral, and I've done that for over 6 years now. I keep every year or so I test my assumptions, like the conclusions I drew in 2017. Do I still believe in them? And every year it's like, yep,
even more.
Bitcoin is what I should focus on. What I think we should focus on. Now, with respect to startups and venture capital, et cetera, it's been a struggle in many ways. One, the volume and size of business opportunity to date has been limited, and then that limits how much venture capital funding there is, and bigger funds just don't really, play in this area. And I think, frankly, for good reasons. I mean, we can shit on Andreessen Horowitz or Paradigm or whatever for not doing much in Bitcoin.
We sure can.
But there's there's not been a lot of investable startups, I don't think. But I think but I'm very optimistic. I'm very optimistic about the future in that growing, and we're already starting to see that here at Presidio Bitcoin. We have something like 7 or 8 Bitcoin startups working out of this office on a regular basis. That's great to see. We're doing this event, and we're going to hear from many startups tonight. That's great to see. And I think we're going to see that 10x, like the minimum 10x, but just the sheer quantity and the quality as well, and the opportunities as Bitcoin just continues to grow and mature. And then smaller funds like Max's are going to thrive, and then bigger funds are going to naturally follow the money and follow suit.
Two things to add. One, if you see us doing this, DK is explaining to me this is the Gen Z snap or clap. So this is what we're doing up there.
So it means the same as this, right? Like, you probably know that, yeah.
Yeah.
This is how you do it if you're like a kid.
We got to stay young, though. The second thing is to add just to what Steve was saying, not just for the funds, but I actually really, really, really do think one of the things that's different right now is Presidio Bitcoin. And to your point, we've already got 7 or 8 startups working here. But when Mark, who funded this place, like one thing that he said that always sticks with me is this is the Bell Labs for Bitcoin. Like this in the whole world, in my opinion, from what I've seen, this is the highest density of the smartest people who are obsessed with Bitcoin. If ever there's going to be a genius that breaks it in Bitcoin, you're part of it right now. So I'm very long Presidio Bitcoin.
So let's talk a little bit about like why it hasn't happened yet. So we could say, the existence of Presidio Bitcoin gives us optimism that we're kind of at an inflection point. Could Presidio Bitcoin have brought that same inflection if we launched it 5 years ago? Or is there something special in the water right now that enables this?
It's a good question.
Maybe we start by like what business categories have worked to date, and obviously like Coinbase and exchanges have worked. They are profitable. A lot of people in the Bitcoin community sort of, cringe at that because it's not like a Bitcoin only opportunity in general. There's a few examples, and we can talk about River and others. I know you've invested in like around the globe as well, but certainly the biggest ones, Kraken, Coinbase, etc. They have to support other coins and heavily promote, basically gambling casinos to profit, and they do profit quite well. So that's one category. Another has been Bitcoin mining, and I mean, the winner to date there is Bitmain. So like the company making the chips, making the equipment, selling it to the miners. And miners' plight can be, good and bad and ebbs and flows and cycle to cycle. But through it all, Bitmain is killing it. So that's been
Are the other things, like I know of like Hut 8 or anything, are any of these other miners, I think there's even some, like Hut 8 may be public. Are there a bunch of these that have grown up from small things to become like publicly traded?
Yes,
companies?
and a lot of those though are absolutely just going vertical right now because they're doing AI. So that's a little bit of a
Also they get kind of
yeah.
they kind of got just diverted by market.
Yeah, which we just had the energy conference here a couple of days ago, and so like it's an extension of what we would expect, that they were there first for Bitcoin, and then as new opportunities emerge, they've been profitable.
But we've not really seen other categories explode, and even in those categories, it's like only Bitmain and then a handful of exchanges. And then what I see from a lot of Bitcoin startups historically, they're typically started by people like us and probably like a lot of people in the room who are pretty hardcore. Like a lot of you probably have gone through the similar journeys to what we said, where maybe you started out looking at other coins or being into Ethereum or this or that, and then arrived at sort of Bitcoin or Bitcoin only. And that to date, that's been a tough business. Or you might even be so hardcore in Bitcoin, like you think that self-custody and privacy and these principles are super important, and they are super important, but does it translate into products that meet customer needs today and generate revenue? That's been a struggle as well. I know gaming we should talk about a little bit, because I know, DK, you have gaming experience in your past, and we've generally been bullish on that as a category for Bitcoin, but that hasn't really taken up. There's some evidence of a little bit of that taking off, but not in a big way yet. So I don't know if you have thoughts on gaming.
Yeah, I think that gaming is an early category. I've mentioned to you guys before on the podcast that I think it's one of the 2 early categories that will break from like a consumer application. And I think a lot of as Bitcoiners, the reason we're all sitting in here is because we actually like Bitcoin, love Bitcoin, want to see Bitcoin succeed, want to help it some way. So a lot of times we're taking this view of like, let's do something with Bitcoin, and let's do something, maybe it's good enough, but it's with Bitcoin. And in a sense, like, I would almost suggest
it's a cult.
Build something that is great, even if Bitcoin didn't exist, and then Bitcoin just makes it better. So instead of saying, I'm building a Bitcoin business, say I'm building something for customers that customers are going to love, and if Bitcoin helps me deliver on the promise of what I'm delivering to customers, then it's a win, right?
I think it's worth adding in terms of those categories. Yes, exchanges have made the most money by far. So if you invest in Coinbase, you're doing great. Although I think it's worth notice, like I think one thing that's always important to have the 10,000-foot view is where we are in Bitcoin's monetization process, right? So like a lot of people, really want payments and all these great things for the world, which is awesome. But you can't force reality to go faster. You can't. I mean, maybe at the margins you can with things like Presidio Bitcoin. But like in 2017 there was the hard fork to Bcash because they really wanted payments. And we're going to get payments, but it has to come in layers with a proper engineering approach. And, when I think about what else is making money, it's like, well, first of all, just holding Bitcoin. Every company that's held Bitcoin has done extremely well. That's something a lot of people don't talk about is like, even if the companies get there early, if they benefit from the store value piece, my hope and my thesis for our companies is they're going to live to see when payments do take off. And to be clear, to your point, when Bitcoin solves a problem, we have seen those businesses work. It's just that the first medium exchange business for Bitcoin was Silk Road. Obviously, that's not venture fundable, but when it solved a problem, there was medium exchange. Now I think we're waiting for when is it going to solve a real problem for payments and plug in the internet. I also think it's worth mentioning, I'm sure we'll talk about more about this tomorrow, one other business model that has made money is lending, collateralized loans.
Yeah. On the gaming stuff, I think instead of like people I've seen who address gaming so far, I think have built games and then built Bitcoin with the games. And I almost feel like with these technologies like Nostr you can actually build totally new types of games that couldn't be built before, and that may have different necessary jurisdictional arbitrage or kind of escape from any specific location. So you could imagine, like, I think we talked about prediction markets. Prediction markets is a form of gaming, I'd say, that's kind of native to. You could do it on the internet. You could do it in a collaborative way with a communication technology like the internet, but it's hard to do well in. There's regulatory issues with doing it well in traditional ways, but Nostr and Bitcoin as kind of publishing and payment mechanisms may enable new ways to do that don't have the same kinds of regulatory and compliance restrictions. So I just think like I think it's too easy to do things by analogy, and I think it's much nicer if you kind of say, what is Bitcoin and what can we do with it that we couldn't do before? And like, can you build things that are like meaningfully differentiated from what could be done? And then Bitcoin just is part of what helps you differentiate it.
I just wanted to say, I think we have about 10 minutes left that we're going to be up here. So we love questions. So if people have questions for us, I'd love to spend the last 10 minutes answering your questions. Otherwise, we'll keep yapping away. But if anyone has a question, yeah, Ryan. Hey.
Could you comment on the last thing you said about lending? Any thoughts on that one?
The question was elaborate on the lending opportunity.
Yeah, I mean, we've seen real demand for people that want. I mean, look, at a 20,000-foot level, I've always say I wish that you didn't have to get around arbitrary regulations, but the fact is they exist. And so, for people that sell Bitcoin, they get capital gains. If you take out a loan with like a 2-to-1 over-collateralization ratio, you don't have to pay taxes on that. And so that has found clear product market fit with products like BlockFi. The problem is, in crypto and gambling, I mean, it goes back to Satoshi in the white paper. The problem is the trust, right? And so I know there's a lot of smoke all around the industry right now, and I would just say in general, like, it's a good business. Will people be able to pull it off without rehypothecating? I mean, you'll only be able to answer that in 5 to 10 years. But I would say understand what you're getting into for any of that.
Yep.
How do you think new startups working in the lending space, it kind of seems like you're facing an uphill battle, especially with JP Morgan's announcement this week or last week of them doing it. I mean, personally, I don't like JP Morgan, but I like them more than BlockFi.
Low bar.
Yeah. Like, how much do you think it's going to be like Bitcoiners in the startup world solving these problems rather than the financial takeover, seeing that Bitcoin is a real capital market and then building products and services
Well,
to meet those needs?
I'll point out that nobody yet has built non-custodial lending successfully. And that's a very important piece to the whole Bitcoin ethos is non-custodial and, be your own bank and self-custody. And so far we've had a few people try and so far, we don't have any standing players who we can point to and say, this is a credible approach to doing this in a non-custodial way. So I think if the more you go custodial, the more you're competing with JP Morgan, like you said. And then there's going to be more competition. Like Schwab is getting into spot Bitcoin stuff. They're going to have collateralized, there's $17 trillion assets, whatever. There's enough stuff in traditional that if you go traditional, I think you are climbing an uphill battle, like you said, but nobody solved non-custodial yet.
There's also 2 companies working out of Presidio Bitcoin and presenting tonight on Bitcoin lending. So we'll all hear from them as well.
One more thing I'll add to that is, for me, as an early stage investor, what I'm most interested in is, like DK said, the net new stuff. So like, will JP Morgan like solve the traditional, whatever, private wealth? I've got some Bitcoin and give me a loan. Yeah, I mean, there's a good chance they will. There's still like obviously more room for competition. But where I think the startups that really hit it big and become the next JP Morgans or the next Googles, JP Morgan will never do. And that's jumping into what's net new possible with Bitcoin. So, we talk a lot about payments. It's not going to be like, oh, I've just got this new payment app. It's just like slightly better than, my Zelle. Like no one's going to do that. It's going to be for something that takes advantage of a global, always on, 24/7 permissionless payment network, which is the internet of value, versus all the other little networks and, shitcoin networks, which are intranets of value. And it's going to be for net new things. Like we talk a lot about this, like AIs, like who's going to bank the AIs? It's sure as hell going to be JPM.
And also, like, I guess, like, to add on that point, like what Rob and Becca are doing at Anchor Watch and how they've integrated Miniscript in a way that makes Bitcoin a much more insurable asset than basically every other asset. And you see that reflected in rates. I think that's great.
And sorry, just one more point on this topic is that what percentage of people in the world are going to be JP Morgan clients too? I think a tiny percentage, right? So products are needed for people all around the world. Yep.
So when you say that there are currently no non-custodial lending solutions, I know that both Lendasat and Hodl Hodl claim to be non-custodial, and of course they're using multi-signature arrangements so that you retain some degree of control. But of course, and the thing that concerns me and causes me to not want to go to either of these is they seem to be a little opaque on the dispute resolution aspects of how, if I just disappear with my key, how they can make good on the collateral that they have some partial custody of. So I just wanted to know how you're drawing the lines around that when you assert that there are no non-custodial, and clearly there are some that are claiming.
I think what he said is no success stories yet. It was.
Okay. The qualifier was success stories, not quibbling over the definition of custodial and the dispute resolution.
Right. Just
Yep.
like you've
these are
heard of
small
JP
products.
Morgan, you've heard of Coinbase. Most people probably haven't heard of Lendasat or whatever.
Those are in a whole different stratosphere than what I'm talking
Yeah.
about, and of course,
But I would hope-
most of us would be,
Right.
prepared to even consider.
But I would hope someday that like a Lendasat or something like it could be at the scale of Coinbase. That seems very reasonable that
Totally.
that could and probably will happen. But somebody needs to solve the problems. We don't know how to solve the problems yet.
And Surge is one of the companies that will be presented tonight, and it's, the whole notion of custodial, self-custodial is kind of a spectrum, right? But they're definitely on the towards the self-custodial end of things.
I mean, we're all on the spectrum, right?
I was waiting for someone to say that. If you're in this room.
When you were saying about, or is there something in the water, my crazy little brain said, a shark. And then two pieces of my brain went, we're not talking Jaws here. Dun, 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 dun. We're talking like, the sharks are 30 million years old. There's something here that has to never fail, that has to just keep swimming. There's going to be some underlying thread, some invisible thing that is ordinary, that is going to be just as ordinary and totally successful on Bitcoin.
Evolution, baby.
Yeah.
Any non-Bitcoin lending questions?
Yeah, I mean, come on, like some more sci-fi, surely.
Yeah, Ariel?
Yeah, I was wondering if you guys think we have the tools to build the products, right? I think there's a lot of startups that are trying to build more tools, L2s for payments, stuff like that. Like, are we just on a gap of like having a foundational set of tools that we can then build
Yeah, great question. And if we look back at the past 5 to 7 years, it's just gotten dramatically better. That absolutely has been a historical challenge for startups. And it's one reason Spiral, all right. It's one reason Spiral, has focused for 6 years now on building tools and protocols to make it easier for application developers. And even, I think Spiral's done good work, but even Spiral alone didn't get it done. Like, people have taken LDK, and there's another startup operating out of Presidio Bitcoin called Lexi, and they created a service around LDK. And now it's gotten so good that you can vibe code a Bitcoin application in under 10 minutes with a one-shot to the AI. And you can do that with Lexi. You can do it with LightSpark's tools. You can do it. There's now several different development toolkits where you literally just like type in English one command. I want a Bitcoin tipping application, whatever, and it gets created for you. So whereas like 5 years ago, you'd need like 2 or 3 talented developers to spend over a year to create a similar application. So I think we are a combination of the tools are much better for Bitcoin builders now. And with vibe coding and AI tools, the combination of those two things, we're going to see an explosion of ideas that are in people's heads get created, and a lot of them will be, bad ideas and poorly executed or whatever. But there'll be such a high volume that we're going to get out of that process many super compelling ideas that none of us could have thought of before.
So I second everything he's saying. 2 things I want to add to that. Number one, Stevie's being modest, but LDK, like what they've been working on for 6 years, is amazing. 2 of the last 3 startups I've invested in are taking what they've been building and now bringing it to the like sort of last mile. So I don't know if those are announced yet, so I probably won't announce them, but like more and more of the open source projects, that really, really helps. And also, it's not just the core Lightning and Bitcoin infrastructure, but all the infrastructure around it, right? So this is one of the reasons I'm so bullish on Nostr. Is to me, Nostr is identity, user-owned identity for the internet. And so all of the shitcoin chains, they've got whatever identity, they try and do stuff on chain. Of course, that will never work. But if you have your own public-private key identity with Nostr that you can now mash up with Bitcoin, with Lightning Network, like I think at my fund, we have like a protocol stack. It's Bitcoin as base value, Lightning for payments, and maybe there's last mile with eCash or Spark or whatever. And then you have Nostr for identity. That's a missing piece that's just being developed in the open source.
Identity and messaging, right?
And
Public
messaging.
messaging.
Yeah.
So we could talk all night long, but I see it is 7, and we want. I mean,
Startup night.
The show tonight is all the cool startups
yeah.
you're gonna get to hear from now. So let's transition to that. I would like to make one announcement. We didn't talk yet about the merchant stuff, right? Okay. So you've probably seen this week, Block announced a bunch of stuff. Square launched Bitcoin payments, across GA.
Woo! That's a big fucking deal right there.
And yeah, Cash App announced a bunch of new features. And one thing that my team played a small role in this, Spiral felt it was important to arm the Bitcoin army with like a marketing kit to go out to merchants to persuade them to turn on Bitcoin payments. And if you've ever tried to do this, it's quite common to go there and then they're super busy, or the owner or decision maker is not available. And so, then you just leave and you have to go back. So we created like a 1-page leave behind with focusing on a simple message, saving 3% fees. Doesn't talk about censorship resistance or privacy or any of the stuff that all of us probably care about Bitcoin, because merchants don't really care about that yet. Everyone, their eyes light up when you talk about saving fees. So we created a couple versions of a 1-pager, and for special hubs, Bitcoin hubs around the U.S., 6 different cities, including this one, we have Bitcoin plushies that you can bring along as well to give to the merchant. So you all are lucky that if you do want to be part of that Bitcoin army to go persuade merchants to turn on Bitcoin payments, we'll make that available at the back tonight. And you can take a plushie with you, take a couple 1-pagers. All we ask is that you report back on your experiences. What worked, what didn't work, the good and the bad and the ugly. Ariel?
I was going to say that Miles Suter from Cash App is currently paying bounties. I think it's about $25 in Bitcoin. If you do convince somebody in
Oh, nice.
And we would love to see Miles's bank account drained. So
Let's go. Cosign. There's one other thing that I also just wanted to mention, since we have everyone here tonight at Presidio Bitcoin, which is back to your original question of could we have done things a little bit sooner? What I would say is that I think the last several years has been a giant misallocation of capital into crypto. I think people are starting to understand that. I think that the people that, frankly, all of Silicon Valley, for the most part, got sucked into playing casino games. Now, the reality is the best talent in the world on average is still definitely in Silicon Valley, not even a question. And the people that have really been diehard with Bitcoin, some exceptions, of course, they're great entrepreneurs all over the world, but have been a lot more sort of open source cypherpunk, which is awesome, but like they're not having the best designers coming out of Twitter or whatever, with some exceptions of Cash App and a few other places. And so I actually do think there is a chance, like for everyone in this room and for this community, actually to change things. Like I think this is a secret about the world and sort of Peter Thiel style. And the secret is Bitcoin's the thing that's going to be around in 5 years, 10 years, 100 years, nothing else. In any meaningful sense. And so if you can help connect the resources of Silicon Valley, i.e. the capital, the extreme talent, to the right protocol or the protocol that's going to be around, I think frankly a lot of that's what's been missing is just like having like A+ designers, A+ business people, and why can't we make that happen?
totally agree. All right. Who's up first, Alex?
Jesse.
All right.
Thank you.
So I am excited to talk with you all about Vora today, which is a home for your digital life. So our vision at Vora, inspired by the Bitcoin ethos, well, it's a world where we control our digital lives. And the story of that is just getting started in terms of where are we going in the future? Are we going to preserve a free society in a digital age? Or is technology going to enslave us? And so, we believe in safety for our data, privacy, and we're going to get into exactly how we intend to implement that vision. So what are the barriers to a safe digital life? Well, for one, most people don't have secure hardware. So that's already game over. How do you have hardware that doesn't have malware, isn't backdoored, isn't subject to supply chain attacks? Like that is the foundation on which everything else rests. Then we need really good key management systems because if we're going to have data in the cloud, it needs to be end-to-end encrypted, and it can't be end-to-end encrypted unless users have their own keys. And you can't really do that in a sane way if you don't have a way of recovering those keys if you lose them. So we need good, robust key management, key recovery systems. Then we need really good software. It needs to be easy to use. It needs to be intuitive. And if we can stack all of those things on top of each other, then we have something pretty exciting. Now, AI is a game changer for self-custody. This is how we're going to get the mainstream into self-custody, not through Bitcoin, but through AI. Then Bitcoin will follow. AI is the most intimate technology that's ever been created. People use it as a doctor, as a lawyer, therapist, partner, so on and so forth. And these personal AIs, the more useful, to get the most utility out of them, you need to feed them all the data. All the data, all your health data, all your financial data, all your emails, all your calendars, everything is going to go into these personal AIs. So yes, in the past, people haven't cared about privacy. With AI, people are going to care about privacy. Just wait till we have the first big leak of somebody's entire ChatGPT history. People will care about privacy. In cloud AI is custodial AI. In the same way that you wouldn't trust a custodian with your Bitcoin keys, for the very same reason, you can't trust a custodian with your AI. So, not your keys, not your AI. Who controls the AI you're using? Yes, there's the privacy piece, but there's also the loyalty piece. Who is that AI loyal to? Who is it programmed to protect? Who controls the model? Who controls the memory? Who controls the system prompts? Who controls the keys? them or you. To actually have an AI that's loyal to you, you need self-hosted hardware, you need verifiable software, you need open models that you control, you need fully encrypted data and backups. Just like our Bitcoin keys. That's how we need to think about our personal AI. In your custody, your policy, verified by math. So our first product is the Vora Aegis. This is your personal AI device. It runs by default the large OpenAI open source model, which is roughly equivalent to O4 Mini in performance. This model has native tool calling, so it can do memory, it can do web search, it can do Python, it can do agentic workflows. Amazingly enough, AI hardware's coming, the cost is coming down fast. So for $2,000, you can get a mini PC with the new AMD AI chip that has 128 gigabytes of unified memory, and you can run this model quickly. But of course, this is your AI, this is your hardware. You can use whatever models you want. And we're delivering the It Just Works experience. You plug it in, you pair the mobile app, you name the AI because it's yours, and that's it. Also, but we're bringing the Bitcoin security mindset to AI. End-to-end encrypted backups, hardware recovery keys, reproducible, secure operating systems that run the AI in isolated environments with attestation, 100% verifiable software stack, and seamless ChatGPT import. Export your ChatGPT data, import it into Aegis, all your conversations, everything is migrated over, super easy, super simple. That's what we're going to ship next year. The year after, we get the big brother. We get the Vora Vault. This is where we add a cold layer to the system. This is also where your AI box also is your Bitcoin box, also secures all the personal technology in your home. We have an air gap system. We have monitoring response for physical threats. We have APIs so third-party products can integrate in and get issued encryption keys. So if you have a baby monitor or a pet camera or home security system, we're going to make it really easy for these products to offer end-to-end encryption because they can tap in to the key management system and the self-hosted server. And we're going to need this for AI too. In terms of where AI is going, the bulk of that AI data is going to need to be behind an air gap in cold storage. Because when somebody hacks into your personal AI, they own you. They know everything about you. It's an absolute catastrophe. So in the same way that you do not want to lose your Bitcoin under any circumstances, you do not want to lose your AI under any circumstances. So we're bringing that Bitcoin self-custody playbook to all personal technology. Market is huge. We've got 800 million weekly active ChatGPT users. Surprisingly, people are worried about privacy with AI. It's changing people's privacy expectations. 9 in 10 people in Europe say they'd use AI more if it secured their data, or if it respected their privacy. So we're going to ship a $2,000 AI box next year, plus a subscription service that does the backups, remote access, and some additional features. Why us? Why now? Well, only Bitcoin self-custody experts can secure personal AI. You need deep expertise in security, privacy, cryptography, open and verifiable systems. Why now? The AI tech has matured to the point where we don't have to be an AI company to deliver personal AI. We have these powerful open source models. We don't need to build the model. We've got these consumer AI PCs that have the chips that can run it at an affordable price. And we've got these open source agent tooling systems that we can plug into to easily offer memory, web search, all the kinds of features people expect their AI to be able to do. And already we're seeing, last week, there's an open source model that rivals ChatGPT 5. So we're potentially going to have local open source models that offer as good performance as the cloud models. So the capability question is solved with AI. Self-custody is the new AI battleground. You'll work with countless AIs, but only one will stand by you. Never betray your trust. Vora is the only AI that's truly yours. So I've got a short demo here to show you what we've built so far. So this is running locally on our prototype hardware. And so we're just getting to, the AI is just getting to know me, telling it my name. And now I'm going to just tell it, a few things that I'm interested in. I'm interested in Bitcoin. I'm interested in AI. And so you can see here we're getting fast responses, high quality responses, the same thing that you'd experience with ChatGPT, except it's running on your own hardware. And this conversation is 100% private. We're going to see here that we get some nice math rendering, maybe not a feature that everybody cares about, but something near and dear to me as a cryptographer. Got to get that LaTeX. So that's coming in here. We get some Schnorr signature math, beautifully rendered. And the other thing is this AI, it can run Python scripts. So I can ask it to give me some Fibonacci numbers. We're getting all the ChatGPT features here. File upload, code execution. It all works. It all runs on the box right now. And web search. So here I'm asking for the latest news. It detected that the query required a web search on its own without me needing to tell it that. And it's pulling articles with sources. So now in a new session here, what do you know about me? Well, now the AI is figuring out from the memory database what is relevant to the query. I can pull up all the memories that it's collected about me that just happened with the conversation that just occurred. I can see them, I can delete them. I have full control of the system, and it's just as good as ChatGPT. So that's what we're up to. If you're interested, visit our website, vora.io. Would love to chat more. Thank you.
Hey, everyone. My name's Steven. My co-founder, Joao, is there in the audience. I'm going to try... Is it okay if we do like Q&A, like a few minutes of Q&A at the end? Yeah. Okay, sweet. So I will tell you what we're all about, and I will save 3 or 4 minutes at the end so that you all can ask questions. So we are Castle, and we are automating Bitcoin treasuries, and excited to dive in more and tell you what that means. The problem, which I imagine all of you are thinking about already, is that dollars are not a good way to save. And it turns out dollars have lost value for over 100 years. The money is broken, and it might have something to do with them printing more of them all the time and never stopping. And the sad place that has led us to is that savings accounts don't. Like, they don't work. It's become a misnomer. A savings account is sort of a borderline scam where it's framed in a way as if it is a high yield account and therefore you are getting ahead. And if you actually run the numbers, so this little cute table here is like the last 2 years, if a business had been just allocating monthly using a few different strategies, say putting everything into cash, putting everything into a high yield savings account, or introducing some Bitcoin into the picture, the returns on paper look fine when it's just nominal terms. But once you factor inflation into the picture, then things don't look as rosy. So that's where you realize that if you sat in cash, you didn't get 0%. You fell behind by almost 5%. And if you allocated to high yield savings accounts everything over the last couple of years on a monthly basis, you lost money. You lost purchasing power. You fell behind. And so you're not actually getting that 4% or 3.5% in real terms. And so we think that Bitcoin is the best way to save, but that it's also too hard for businesses to be successful with today. And part of what I mean by that with too hard is if you go out to a business owner and you ask them like, hey, owner, CFO, treasurer, how much money would you be comfortable putting in Bitcoin, like for the business? The answer that you will always get usually takes one of two forms. They'll say, well, we would put like 3% of our revenues into Bitcoin. Or maybe we'd put like 5% of our balance sheet into Bitcoin. And what's interesting is if you think about those two ways to allocate to Bitcoin, there hasn't really been a way to do that with software. To achieve either of these two things, you have to have humans go and like look at spreadsheets of how much money you made and click buttons and go to places that are kind of like Forex exchanges almost. And so it's a very just out of the way manual experience oftentimes. And even the language that those types of businesses use is just very different from like retail traders and individuals. And so the whole user experience is different when it's businesses, especially like cash flow, everyday businesses. We're not talking like Wall Street behemoths like Strategy or, retail traders or hedge funds, just everyday businesses that you walk by. The way they think about preserving their value, investing, if you will, is a whole different language that they speak. So we're building Castle. We are trying to automate Bitcoin treasuries, automate the allocation to Bitcoin as a savings technology. We do that in a handful of ways. Our platform is live. We have like customers using it right this second. We're happy to show you demos on our laptop later. We have this notion of a revenue automation where they can link up the systems they already use for payment and bookkeeping and tell us what percentage they want to put in Bitcoin. We have sweep account functionality to take any idle cash and just make sure it's not sitting there bleeding value. It automatically sweeps it into Bitcoin for them. Yes, you can do manual or recurring buys, of course. And then we have treasury management functionality. So if you wanted like never less than 5% of your holdings to be in Bitcoin and never more than 15%, then you just define those as thresholds. And the system will kind of make sure your treasury looks the way that you want. Easy access to liquidity if you need to pay bills. So click of a button, you can sell funds in your bank account at least by the following business day, but usually same day. And then just automate as much as possible with software, like the bookkeeping, the compliance, the KYB, know your business process. Business owners are often hustling and busy, especially small business owners are busy. And so every little bit of efficiency that we can bring to them with software is a really big deal that compounds meaningfully. This is like our homepage. So if you have an account on Castle, you log in, you have a dashboard that kind of looks the way you would expect. You can see the performance of your Bitcoin over time. We're never going to have candlestick charts in our product. Like we don't want people thinking about this as a way to trade, trying to buy low and sell high. We think this is a gradual accumulation, long-term orientation game. And we're trying to encourage that in every part of our user experience. So to do this, we built integrations with pieces of software like this, products that business owners already use and know and trust. Stripe, Square, PayPal, Shopify, MindBody, which is a big one in the gym and fitness and wellness space, Clover, QuickBooks. We don't have anyone using the eBay integration yet. We wrote that one recently, but like power sellers could link up their account and get a percentage of what they're making in Bitcoin. And this is what that looks like. So in our UI, you basically connect whatever source of revenue you want. You select it. There's a linking step where you would like type in your authentication credentials for whatever system that is. And then boom, link is created in a couple of minutes. And then we just give you a little slider bar that you can drag that tells us how much of the money you're making you want to go into Bitcoin. We also have the concept of a sweep account. I don't know if anyone's encountered that in the TradFi sense, but it's basically a way to set a threshold in your checking account. So a business owner could say, $10,000 is the threshold, and then we monitor the account. And any time that there's more than $10,000 in the account, we sweep the excess into Bitcoin. So it's a way to ensure that there's no idle cash that you don't need for day-to-day operations, just sitting there bleeding value. This is the meme version of what we do. so businesses are out there and they're like working hard and they're trying to create value for people and they are getting paid in broken money. And we are trying to give them a seamless and automated way to protect themselves from that and to choose with precision how much value they receive in Bitcoin. We raised $1 million pre-seed earlier this year from people that were really grateful to have believing in us. It was led by Boost VC here around the Bay Area, Winklevoss Capital, Epoch VC, and Park Rangers. And then some awesome angels as well. The last 12 months, we built this thing, released it. We did a private beta with 10 businesses that were kind of our early adopter cohort and believers. There's been about 100K of transaction volume just using that revenue automation feature specifically. That's about $1 million worth of volume that's been converted to Bitcoin automatically. And importantly, we have obtained heart emojis in the feedback from our users, which is very much a North Star to us, because at this stage, we want to just be sure we're doing something that's genuinely useful. And in the next 12 months, we are going to go higher in the market. We're serving small businesses right now. Every business on our platform is a small business. And we are in dialogue with larger corporate partners to kind of function as design partners and have a pro tier offering with some different economics around it and a whole different set of integrations for the tools that larger companies use. And we believe we can hit 50K in monthly revenue by that point. And then, of course, AI is something that we are thinking a lot about. And I think, we all probably realize that AI is just fundamentally changing the way that we might interact with software. As smooth as our slider bar is, I think that the era of pointing and clicking in web browsers to get stuff done might be coming to an end soon. And so we just want to make sure that we're positioned for that future very well. And this is us. So I lived here in the Bay Area for 10 years, worked at eBay, cloud computing space in 2012, and an AI company called Nirvana Systems about 10 years ago that was acquired by Intel. I've been pretty active in investing into early stage companies, and the Bitcoin sector has been a big emphasis of that. And I love community building. Like Bitcoin meetups were such a special part of my personal journey. I've tried to do a lot of that as well. My co-founder Joao has previously co-founded a company you might have heard of called OpenNode. They were pioneering Lightning payments for Bitcoin and raised money from some great investors. There are 34 million small businesses in the US alone, and not that many hold Bitcoin yet. Maybe, and Square, by the way, shout out to Square because this is an incredible week for merchant adoption in businesses, and so we love to see it. This is going to get a lot more business owners thinking about this concept, and it's frankly just like the most exciting stuff that I've seen in my decade plus of Bitcoinery so far. So not many businesses hold Bitcoin yet, and that is a lot of opportunity. So let's go. And then I'll probably have time for like 2 questions, maybe.
Let's do a quick one. Who's got one?
Yes.
All right, so I know you said you don't want to be a trading platform. I think I can speak loud enough everybody can hear me, but I know you said you don't want to be a trading platform, but I have to ask 2 questions regarding the funds that are being allocated towards Bitcoin, which is first, and this is a no-brainer, I'm sure you're going to answer, yeah, sure, is when it's allocated, it can go into a DCA account and then do dollar cost averaging for the actual acquisition, yes?
I'm glad that you asked. So yes, like we do support DCAs in the form that they've existed for a while. Like you can set up a recurring buy of a fixed price. And then our revenue product, I guess it's technically a new form of DCA, or similar to what Square has also released recently, where that percentage of the revenue you're making is effectively dollar cost averaging. And as the business owner, you can choose the settlement time frame. So your options are daily, weekly, or monthly.
Okay, and then the other question would be regarding limit orders. So if, for instance, I have a target at which I would feel FOMO if I failed to sell some of my Bitcoin, then some of my business's Bitcoin, if I were, in charge of setting the policy for such a thing, I would like to be able to say, well, if it hits 150 tomorrow, I'd really like to sell about half of it to, be able to pick up some on the, inevitable following dip. So do you support that yet, or will you? And those are my two questions.
Great question. And we actually, that'll have to be the last question, by the way. I realize the timer is blinking at me. We don't support limit orders today. Never say never, but we don't have any plans to support limit orders anytime soon. We'll probably have to support things like TWAP type things for larger corporates, just for volume-based reasons. But if they really wanted limit orders today, then platforms like Kraken or River or something like that's probably a better fit. Like the time weighted, if you basically wanted to put like $200 million into Bitcoin, but not all at once, then it's a way to automatically kind of chip away at that over time. Cool. Thanks for the question.
All right. Give it up for Stephen Castle. Thank you.
All right. Hey, everybody. My name is Tony Clausing. Thanks so much for staying for the presentation. Thanks to Presidio Bitcoin for hosting. I work here out of Presidio Bitcoin, and it's truly the best place in the Bay to build as a Bitcoin builder. I'm here to present today about my project called Stable Channels, and it's a way to deliver stabilized dollar balances on Bitcoin while preserving the core Bitcoin ethos of self-custody and decentralization. So let's get to it. First, I want to start with this simple chart, and this shows the growth of Tether since Tether. The growth of stablecoins since Tether began in 2014. And whatever your view on stablecoins, the product market fit here is undeniable. Stablecoins give people access to a dollar bank account. They provide a base pair for crypto trading and a medium of exchange. But at the end of the day, stablecoins are fiat IOUs. They aren't Bitcoin, right? They require trust, intermediaries, and balance sheet risk. This stands in contrast to Bitcoin, and after all, we're here at Presidio Bitcoin, not Presidio Stablecoin. So the question I'm asking today is, can we deliver stable dollar balance on Bitcoin itself in a way that preserves the ethos of Bitcoin, self-custody, peer-to-peer architecture, and decentralization? Well, I believe we can with something that I'm calling stable channels. So the core idea of stable channels is that we match up to Bitcoin holders on a Lightning channel to stabilize Bitcoin at a US dollar price. One side wants the stable dollar value, and the other side is willing to provide that stability, take the opposite of the trade, effectively going leverage long, the stability provider on the right side. Both sides run Lightning nodes, and both sides run the stable channels software. And both deposit Bitcoin into this shared payment channel, this regular Lightning channel, which we designate as the stable channel. So let's take a simple example. Let's say you're a hodler, you've got one Bitcoin, and the price of Bitcoin reaches $100,000, and you want to lock in that price. With the stable channels wallet, you move your Bitcoin into self-custody, into the wallet, and into the Lightning channel, and we match you with a stability provider who's willing to peg you at $100,000. So here's how it works. Every 30 seconds, the software goes out and gets the latest price from several different exchange price feeds, the latest Bitcoin price. And one of three things has happened. Let's say the price hasn't moved, and that's good. The user wanted to be stable at $100,000 and is still equal to $100,000. But let's say that the price goes down. Then that means that it takes more Bitcoin to keep this guy stable at $100,000. So the provider streams sats, streams Bitcoin over to the stability receiver. Now let's take the other thing that could happen, which of course is that the price goes up. If the price goes up, then it takes less Bitcoin to keep this guy stable at $100,000, right? So if the price goes up, then the receiver is streaming payments to the stable provider on the other side. The provider effectively has the leverage long exposure. So this continuous, cheap, high-frequency rebalancing is only possible because of Lightning's capabilities of settling instantly and almost for free, basically for free. The receiver gets low volatility as they want. It's a synthetic dollar position, And the stability provider gets leveraged long exposure as the price rises. So what I've built is an application for a self-custody user to cleanly access this protocol on one side. And then on the other side, I've built a full stack product for the Lightning service providers or service providers to manage their stability channels and manage their relationships with users. With this architecture that you see here, Lightning lets us compress counterparty risk down to mere seconds. That unlocks what I'm calling streaming finance, financial relationships that update continuously in tiny increments. With this platform for streaming finance, we can build all sorts of use cases on top of it. So this is the Stable Channels desktop application. One use case, of course, is stability as a service, keeping users stable. Stablecoins have tremendous product market fit. Another use case is that users can choose what mix of Bitcoin allocation they want and what mix of dollar allocation they want. For example, this user wants to have 25% Bitcoin, 75% US dollar exposure instead of $100,000 or 100% USD exposure. This user would have $75,000 of dollar exposure and 0.25 Bitcoin exposure, so they can trade back and forth. We can also add in interest rate payments paid over that self-same channel, similar to funding rate mechanics found in perpetual swaps or perpetual futures and crypto markets derivatives. Of course, now with Square merchants accepting Lightning payments, we can also add in payments in and out over the Lightning-enabled capabilities. I think that this will also be useful for financial privacy because it uses Bitcoin's peer-to-peer architecture and emphasis on self-custody. Also, in specific jurisdictions and specific situations, I think that the solution might be tax efficient because you're entering into a synthetic dollar position rather than an outright sale of your Bitcoin. Looking forward, we can think about users wanting exposure not just to dollars and Bitcoin, but perhaps wanting exposure to other types of financial assets using Bitcoin as a derivative settlement mechanism. For example, right here, the user has a portfolio of dollars, Bitcoin, stabilized gold, and stabilized S&P 500. And each of those is, the demand for providing or receiving this stability is modulated with a funding rate similar to cryptocurrency perpetuals futures. So finally, a little bit about me and about the project. Before this, I spent years at JP Morgan, where I designed and built their digital assets trading network. That system has moved trillions of dollars since it launched in repo trades, tokenized stablecoins, and tokenized U.S. Treasuries. But I'm a longtime Bitcoiner, and I'm happy to be working on Bitcoin now. And I'm focused on, with all of the entrepreneurs and builders in this room, building out multi-trillion-dollar value use cases on Bitcoin and Lightning. So the product now is in MVP status. It works on, it's in the app Mac Store. You can use it. It also works on Linux and Windows desktops. The project is now in an open source incubation stage. I've received sponsorship from OpenSats and the Human Rights Foundation. And looking forward, I'm looking for ethos-aligned developers, advisors, and partners to work towards scale, commercialization, and ultimately hyper-Bitcoinization. Thank you.
All right, guys, thanks for having me. My name is Andy, or Andres. I'm the co-founder and CEO of Guarana Bank. And so I wanted to share with you guys this phrase from Stephen Hawking. He gave us, it is the past that tells us who we are. Without it, we lose our identity. And I figure I should start explaining why I'm here, right? I'm born and bred in Argentina, and this is a quick storyline of my hometown. And you'll see that the first 60 years were pretty hectic times, but then we transitioned what we oftentimes called as the golden age era. That was a time of prosperity, roughly 50 years. But then if we go all the way up to 1989, you'll see that we ended up the year with an inflation rate of almost or above 3,000%, which is insane. And so April 91, we pegged the peso to the dollar. That lasted close to 11 years. And then, a few weeks ago, Scott Besson bailing out Argentina. He's bullish about the Argentinian pesos. You guys should explain me about what's going on with that trade, because he's stating that he's making a profit, right? So a few fun facts that I discovered during this research is that from the 70s up until now, we went through 5 different currencies, right? And then there's this guy that lasted. This guy made it all the way from 1881. It's called Argentino Oro, which means Argentinian gold, right? Even though it has value, intrinsic value for the gold per se, right? It's actually a collectible right now. And so here we are. We are here to build a new economy where everyone is going to unlock access to credit without selling their Bitcoin. And the problem is traditional lending has always relied on legacy systems driven by bureaucracy, credit scores, and the lack of transparency. Bitcoin now represents roughly $2 trillion in global wealth, and since inception, it's proven to be the best performer long-term store of value. All right, going back to my original question, why is Scott Besson so bullish about the Argentinian pesos? And the reason is the peso lost its value over the past 25 years, 99.9% versus the dollar, right? And that gives you an annual average loss of 34%. This is a snapshot of Bitcoin versus the Max 7. And even though this is dated, even today, Bitcoin is doing better than Tesla and Meta. All right, this is our foundation opportunity. We started with a 2 trillion market cap, and then after accounting for inactive coins, we get to $800 billion. We then applied a 20% ratio for people who is willing to put their capital to work. And if we then apply a 2-to-1 or 50% LTV or loan to value, we arrive at a total addressable market of $80 billion. All right, tracing a parallel with the first quote of Stephen Hawking, Lynn Alden describes that we can imagine Bitcoin blockchain ledger as a giant decentralized digital monument dedicated to preserving the objectivity of the past built out of processing power. And the reason why I'm pointing out the information paradox is I want to believe that Stephen Hawking was a Bitcoin OG, first and foremost. And then for the most part, these guys have been delivering good products, good services, but custodial, right? And they are stripping away transparency, which is one of the most fundamental attributes of Bitcoin. This is why at Guarana Bank, we are building a shared custody Bitcoin-backed credit app. We as founders see ourselves as individuals who want to hold Bitcoin long-term and still sleep well at night knowing that we didn't hand over control of our assets. And we believe that non-custodial solutions will become the standard, especially in places like Latin America, where we are serving to empower our customers. And the way we are engineering the future of Bitcoin collateral management, it's powered by BitGo. This is us, myself. I've been really grateful and proud to be speaking with you tonight. I'm born and bred, as I mentioned, in Argentina, but I've been living here for the past 4.5 months. Paulo, he's one of my co-founders. He flew all the way from Barcelona to be here tonight. And Gustavo, he lives in Berlin. And even though we are scattered across the globe, we all grew up in Buenos Aires. And we personally faced decades of extreme currency devaluation. And then for me came the undeniable personal impact. And it was during the early 2000s that my dad lost his job. And at that moment, I realized that was a profound realization that the 9-to-5 path, the promise of financial security, was not really aligned with any sense of financial security. And so that moment shifted my focus towards a singular goal as how do I build financial freedom? Thank you.
All right, that concludes the presentation. So thank you all for being here. If you want to get in touch with any of the founders and entrepreneurs, obviously they're in the room. Otherwise, you can reach out to me at hello@presidiobitcoin.org and happy to make the connection. Thank you so much for being here.